Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. And I'm going to start off by apologizing for my voice. I've had a cold for a couple of weeks now, and this information that I want to get to you is very timely, so I didn't want to wait until my voice sounds better. So thanks for pushing through with me. If one of your big goals is to own a home and you are working on getting your credit to such a place where you can get a mortgage loan approval, I want to tell you some changes that's happening with the FHFA, which is the organization that oversees Fannie Mae and Freddie Mac. And those are the two organizations that most lenders follow their guidelines for loan approval. So the FHFA just released their annual scorecard. And part of that scorecard, they shared their priority for this next coming year. So their goal for 2022 is to increase housing affordability and equity. So what does that mean? They're trying to find ways and measures to allow more people to get approved, but still protect lenders' risk when it comes to getting approved for a mortgage. So one of the ways they're making that happen is revising and changing some of the credit score models. So if you've listened to any of my episodes before, you know that there are literally dozens of scoring models out there. So what is your credit score? The one that counts, which is the one that the lender goes by if you are applying for credit to get extended to you. Typically, mortgage lenders go off of the FICO credit score. And what you typically see on the retail side is called a Vantage score. Well, some exciting news is that Vantage score, according to an article in the Wall Street Journal, they have passed the agency being the FHFA, Federal Housing Finance Agency, their credit score assessment for accuracy, reliability, and integrity. So they have one more hurdle, which they are suggesting they're going to have completed in about the next 8 months. And it's to look at the accuracy and reliability of that credit score model and how it aligns with the values and matrix that Fannie Mae and Freddie Mac use. There's obviously going to be an impact on changing models by which the lending institutions go by. They're going to set up parameters that still allow them to be competitive and risk adverse, but potentially open the door for more home buyers to get approved. So that's exciting stuff. Another really cool new implementation, and it's in effect already, is that we can now include a positive rental history in calculating your consumer credit score. So this will be a new component that's added to the new scoring models, presuming your lender goes by it. Not all lenders are using the newer scoring models. But I want to share this statistic with you because this kind of blew my mind. According to an article I just read today that was just issued from Housing Wire, there are 44 million households that rent. And right now, currently less than 5% of those renters actually have their rent payment reflected on their credit report. Some property managers will pay to have that reported on your credit report, but according to them, it's less than 5%. So for those individuals or households that have very thin credit or no credit established yet, maybe you just haven't gotten around to it, maybe you're just young, or perhaps you're debt adverse. In other words, you don't want to go and get new credit cards and new loans just to play along with the credit game, which I totally understand. This is a really cool way to help build trade lines on your credit report without having to actually take on new debt. And to me, it makes complete sense because for most people, their housing payment is their largest single cash outflow every single month. I'm of the mindset that if you can pay your rent on time, you can pay your mortgage on time. So why wouldn't that reflect and be part of not only your credit report, but that overall profile for the mortgage loan approval? So I just wanted to share this with you very quickly. As this starts unfolding, I'll share some additional information because I know many of my listeners have some very big goals. And one of those goals is to become a homeowner, which likely requires getting approved for a mortgage. So stay tuned for updates, and thank you so much for joining me for another episode. And until next time, my friends, stay well.
Subscribe now and share with a friend to stay in the loop for new credit content and insider tips to maximize your credit knowledge. And follow Credit Christy on Instagram.